Welcome to The Explainer. Today, we're breaking down a different way for Canadian tech companies to win, one that trades that super risky hunt for a unicorn for a much more resilient and, honestly, a more profitable path to success. So let's say you're building a tech company right here in Canada. Chances are you've been soaking in all the advice from Silicon Valley, and you've got this very specific idea of what success is supposed to look like. But what if that playbook, the one that's been handed down to us, what if it isn't just one of many options? What if, for most Canadian founders, it's actually just broken? To really get the alternative, we first have to talk about the dream that basically runs the entire tech industry, the hunt for the unicorn. The goal seems pretty simple, and it's definitely tempting. Raise a ton of venture capital, grow at an insane speed, and hit that billion-dollar unicorn valuation. This high-risk, high-reward game has become the default definition of making it in tech. But what happens when you actually look past all the hype? Well, the data tells a much different story, a pretty brutal one, especially for companies trying to make it here in Canada. Okay, get ready for this. For Canadian startups who are out there actively trying to get institutional venture capital, the success rate is less than 1%. Just let that sink in. For every 100 companies trying to land that first big check, more than 99 of them will fail.
And even if you're the one who makes it, if you get into that tiny sub 1% club, the fight is nowhere near over. The data shows there is still a 90% chance that the founder, you, will end up with absolutely nothing from the financial outcome of the company you poured your life into.
And what about the long game? Well, the 10-year survival rate for these VC-backed companies is only about 20%. The whole model is designed for a few giant winners to pay for a massive pile of failures. And the odds, they are definitely not in your favor.
Man, that all paints a pretty grim picture, doesn't it? It just begs the question, is this really the only way to do it? What if there's a smarter, more sustainable way to build a great tech company in Canada?
And that brings us to the good stuff, the alternative playbook. This is a strategy that completely shifts the focus from chasing hype to actually building a solid foundation of profitability, founder control, and a much, much higher chance of a real win. So, at the heart of this playbook is something called bootstrapping through contracts. The idea is, instead of burning through investor cash trying to find a product, you use service contracts with bigger companies to fund your early days. This means you actually get paid while you're building your expertise in your product.
And listen, this isn't some fringe theory. The research shows that a really significant chunk, we're talking 20 to 30%, of successful early-stage tech companies use this exact model to get going. They start with services, and then they scale up their product.
All right, so the first play in this book is all about using contracting to de-risk your startup, bring in revenue early, and build a rock-solid foundation for whatever comes next.
Now, this strategy has some really clear pros and cons. The huge benefit is that steady stream of revenue. It lowers your risk and it builds credibility. The main risk? It can definitely distract you from building a scalable product, or you could become too dependent on just one or two big clients. So the key here is to see contracting as a bridge, right? Not the final destination. This timeline really lays it all out. That blue line, the contracting first model, starts making money early on, funding its own development. Meanwhile, the product first model in green is just burning cash from day one. And yeah, the contracting path might look a little slower, but it is way more stable, and you're not nearly as reliant on outside money. The second play is all about leaning into what makes building a company in Canada so unique. It's about using the powerful home field advantages that are literally built into our system. I mean, Canadian founders have some incredible tools. The SR&D program gives you non-dilutive funding for R&D. That's basically cash back from the government without giving up any equity. Then there's the small business deduction, which dramatically lowers your taxes on early profits. And our immigration policies, they create a global talent funnel that other countries can only dream of. And this quote just drives the point home. The small business deduction gives Canadian companies the biggest tax break in the entire G7. Our whole system is uniquely set up to support profitable businesses, not just those high-burn unicorns. So what this all comes down to is redefining what startup success really even means. And to do that, let's compare the resilient camel to the mythical unicorn. The choice really boils down to this. On the VC path, a founder's payout is basically a lottery ticket, you lose control, and profitability is something you'll worry about maybe later. But on the alternative path,
You have a much higher probability of a real financial win, you get to profitability way faster, and you keep control of your company.
This image just captures it perfectly. On one side, you've got the unicorn, a mythical creature, famous for burning through cash like there's no tomorrow. And on the other, you've got the camel, an animal built for endurance. It's resilient, it's efficient, and it thrives in harsh conditions to build something that lasts.
And the numbers totally back this up. The 10-year survival rate for bootstrapped companies is nearly double that of their VC-backed peers, 38% versus just 20%. Choosing the camel path dramatically increases your odds of actually building something that sticks around.
And so that brings us to the final and most important question for you as a founder. What does success really look like for you? Is it that tiny, tiny chance at becoming a mythical unicorn? Or is it a much higher probability of building a resilient, profitable, and lasting company that you actually control? The alternative playbook is right there. The choice is yours.